Okay, so let's say that you already have a property, you've been living in it for a while, or owned it for a while, or inherited it, and that property has a lot of equity. You can tap into that equity, right, with home equity line of credit, or if it's a commercial property, commercial line of credit. But let's just talk about home equity line of credit. If you have a lot of value, a lot of equity in your property, and very little mortgage, you can literally tap into 80% or 70% of that money in order to go ahead and be able to fund your next investment property. Let's just take a look at 3 ways that you could do that. Number 1 is down payment. If you tap into your home equity line of credit, assuming the property numbers work, you have to be very calculated, but if everything works, you can go ahead and use that money as a down payment onto your next investment property, getting you another property that'll start pushing out cash flow, start appreciating in value. The other thing you could do is, if you have so much equity from one of the properties that you maybe inherited or things like that, and you still want to buy more investment property, you can literally use the money from to fund the full purchase of your next investment property. So meaning, if you get a home equity line for 1.2 million because you have a property that's worth 1.8 million or something like that, and then you basically take that money and you go and you buy another property for that price, which is going to bring you more cash flow and an opportunity to build your portfolio. The other thing you could do is you could boost your property potential. If you have an investment property, take the money out, renovate the investment property, raise the rents, raise the value of the property, allowing you to increase your rental income, allowing you to increase the value of your property, and you can also build it that way. Those are just 3 ways that you can use your home equity line of credit to start building a bigger, better portfolio for your future, so you never have to work so hard ever again, and you're getting cash flow and money and appreciation, and boom, you are an investor.